Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It's Thursday, and it's October 29th. Well, the market is shaky. It's still under pressure. We did have it move up a little bit, though. The Dow moved up 150 points, which is a good thing. Right in front of this election, it's really uncertain, and it's just hard to figure out kind of the mood of everybody and how things are happening. So here we are. We're still under pressure, so it's definitely, you got to be really careful about deploying any capital. Really recommend probably taking stuff off the shelf, especially. Also consider, if you've got some gains, selling them prior to coming into earnings, because earnings can be very, very tricky here. There's a lot of companies that are coming through earnings, but even the companies with excellent earnings are pulling back. So that's typically the way. So you got to be careful, when you're putting money out there. Hopefully, after some of these decisions are made with the election and everything, we'll get into a little bit easier to digest a market. But right now, it's tough. We're up today, though. This is the NASDAQ here. It's up 1.55% when this slide was taken, but we're still in an uptrend under pressure. The what I was talking about earlier, the S&P is up. It's pulled back a little bit. The Dow Jones is up, which is good. That's the one that that it was up 150 points. It's actually moved up a little bit beyond that. So we do see some firming on some of the things. I want to take a look at the Spider. This is the world's largest ETF, and many people have their entire net worth in this. As you can see, we had a cup with handle formation, which is means that it's possibly going higher, and there is a buy point of 354, but we've pulled way lower than that. Now, I think we may have seen a bottom, because we have an update today. We pulled all the way back. We pulled back yesterday, 3 down days in a row, 1 up day. So it looks as if maybe we'll finish the week strong, but still, it's definitely difficult in terms of the critical levels. Didn't quite make it to the 320 level, which was the most important level here, which is good. It pulled above that, so looks like we have some stability right about 325, and we've pulled up today. So that's a kind of a good thing. We may be seeing it move a little bit more stable into the election. So, of course, we may not know on election day what's going to happen. This is going to be a pretty big contested election, so it could be interesting for the market. The real thing that is driving the market, of course, is the stimulus plan, and just it just doesn't think that's just not going to happen before the election. So hopefully afterwards it will definitely needed here. Let's take a look at the QQQ Trust. This is the NASDAQ 100, basically the 100 largest stocks in the NASDAQ by volume. And, of course, all the good stuff's in here, like Alphabet and Apple and that kind of thing. Apple is looking pretty good today, up a little bit. So, maybe we're going to see some strength. I'm of the impression that Apple sort of at this point is priced to perfection, but, it looks like it's strengthening. So that's a good sign, I think, for the overall market, because it's sort of a bellwether stock. Also, you can see this one pulled down. This is a cup with handle on the QQQ as well. It has a higher relative strength rating at 84 than the S&P 500. So this is why I invest typically in these kind of stocks, these NASDAQ 100 stocks, because they typically do outperform the rest of the market. We pulled back sharply yesterday, and now we've pulled up. The critical level on the QQQ, I believe, is about 275. It's currently at about 277.10, so above that key level, which I think is very important. I do have a breakout stock. This is a stock that I did put in my small portfolio yesterday as it was breaking out. It's continued the movement up, and this is an interesting stock because I would have never expected this. I just do it totally on the technicals. Technically, this stock is looking pretty good. It's Tupperware. Who would have thought, Remember those Tupperware parties? Those old movies that you saw back in the 50s? And everybody's having the Tupperware parties. Well, the same company. And for some reason, and I can't quite figure this out, please, if anyone knows, please tell me why this is the case. But we had a double movement up. We are at a 99 relative strength, which is very strong. And we have moved up one yesterday, and then we've moved up again today. Currently trading at about 32.83, up about $4 today. So very, very strong in terms of that. So that's the kind of thing that we're looking at Tupperware. I don't necessarily know if it's buyable at this point. We're a little bit beyond kind of the buy point, which was 27.19. So I don't know if it's buyable at this point, but definitely one to watch. If we get more strength on Friday, then it may be worth at least a half a position or so in the stock. Just kind of an FYI, kind of give you an idea of where I have my where my current holdings are. And I have reduced a lot of them, but I'm still in several. Of course, I'm in Tesla. It's up today. When this was taken, I think it's up a little bit higher today. And Cloudflare's off a little bit, but this was a gap up as well. I'm in Qualcomm. It's up strongly today. Greystone Bitcoin Trust, no, not so much, but it's kind of holding steady. I don't know. I have a very small position in this one. I don't know if I will move more into this. I still have a large position in cash just because of the market. And of course, I did go in with a full position in Tupperware, and that's proven to be pretty good. It's actually worked pretty darn well. So that's kind of the situation there. So without further ado, let's get over to some of the questions. Thank you for holding on. I appreciate it. Let's see. Okay, well, let's see if we can get we're a little bit challenged. There we go. Okay, the first question. NEO is doing well. Absolutely, it is. And as a matter of fact, it's on the watch list. I just want to kind of point you over to that. I did re-up on NEO. We got another very good report from from Morgan Stanley. So that's something that I want to kind of point your attention to. And this is my Jim's small portfolio of highly rated stocks, and I did update, and I just kind of want to show you. Yeah, there we go. I put it in red so that you could see kind of what it was doing. It's been on my list for quite a while now. I do have a new buy point of about 27.69. It's at 31.88 currently. It's a little bit extended, but the chart is looking very, very good on this one. And so let's kind of just jump over to the chart, take a look to see kind of how it's doing. And this they call this company the Tesla of Japan, and they definitely have done well. It's just marching right up the 10-day exponential. That's this little pink line here. I don't know if you can see it, but hopefully you can at home. And it's well above the 21-day exponential. It's got a relative strength of 99. That means it's in the top 1% of all stocks right now, up $4.38 today. How are we looking in terms of the checklist? Let's see if this is even viable. Well, I definitely think it is, because it's got 8 out of 9 criteria on the technical criteria. So that's looking very good. Let's look at the funds. We're definitely up on the funds. That's another good thing. By the way, everybody, what moves a stock typically is not necessarily retail investors. It is funds that are getting into it. And definitely NEO has 23% fund sponsorship. So it's looking very, very strong. Do we expect it to go up? Well, let's see if we can kind of, draw a line there to kind of get an idea of sort of how it's moving up. So it's kind of moving up in this general direction here. And I've drawn a little bit of line. So I think, we potentially could be about, and let's draw a channel, because I think that's the best way to show this. But this is essentially the channel that we're talking about here. And it looks like it's moving very nicely through this channel. So, do expect it to go higher in the month of November. Looks like it may go as high as potentially, over $42. So, this is sort of the channel that it is drawing. Now, it's had very strong. It's a very strong volume, which is excellent. Anytime the volume is above this red line, that means it's better than average. And by the way, this is an exponential volume. So this is quite a bit. This is quite a bit of volume. So definitely see some of the big funds moving in here. So this is definitely on the watch list, and I may be, if it behaves well tomorrow, I may I may go in with a half or a full position on the small portfolio. By the way, if you want to take a look at the small portfolio and you want to get a look at that, it's super easy to to get on the list for the smart portfolio. All you have to do is go to www.Dallas Trading Floor, and then just it's not the first one, it's the second one on there, and I could kind of show you kind of where that is on the in general website. But if you want to sign up for that small portfolio that I just showed you, and that's got all my watch list and everything, it's right down here. It says get a link to view Jim's small portfolio, first and last names, and hit that submit, and you will get that right away. So that's an idea there. So let's look at the second question, and let's look at somebody from TikTok. I've been ignoring TikTok, so let me see if I can get to the top here. Thank you for being patient, and let's see if we have a question. Thoughts on PWB? Let's look at PWB really quick to see kind of what their thoughts are. So I'm going to take a look at PWB. PWB, is that right? PBW, I'm sorry. PBW. I got that wrong. There we go. All right. And this Invesco. Okay, so this is a ETF that we have here. And, that's, definitely, I definitely recommend ETFs for a lot of things. It looks like it's hugging the 21-day exponential. Not a surprise. We had some good volume there. 65.30, up $1.87 today. Let's kind of look at this in terms of the checklist. It's a good checklist, 7 out of 9. But remember, this is an ETF, so the checklists are not necessarily as important on this as on other ones. This is Clean Energy here, which I think does have a good future as well, and not a bad stock. It's got a 98 relative strength, so that is looking pretty strong. That's the 98 here. So could you buy it at this point? Well, it looks as if it's rebounding, so it might not be a bad idea. It might not be a bad place to buy it, but be a little bit careful. Set your stop losses, and let's just kind of take a look at the channel there to see if we can see it. We can see if a channel is developing. Well, it looks kind of like it is. So 96 on the relative strength, definitely good. It looks like it's reversed. Definitely buying something on a reversal could be very, very, very good. So, if we come through this election, that is going to be the time in which we get the best bang for our buck, because usually when the market turns, and hopefully it's going to turn to a confirmed uptrend and not to a market correction. Right now we're in a uptrend under pressure, so we definitely it's definitely moving a little bit sideways. But if we get a firm movement of the general market to a confirmed uptrend, which we may get if we get quick resolution on the stimulus and on the election, then I think we can, then it's time to jump in again to stocks. So that's kind of the way it goes on there. Okay, Netflix. Let's take a look at Netflix really quick. There we go. Netflix, I think Netflix, I believe, announced today. Okay, up to 18%. Looks strong buying. So it looks as if, we do have some strong buying up to the 50-day. It looks like it may have turned. I want to see another confirmation day. I want to see another up arrow day, but it's looking good. 508.59, up to $22. Wow, that's terrific. It looks like it may have turned in this consolidation. Now, if you can see on the pointer here, the low of the consolidation is about 458, and the high is about 572. So potentially, if this thing turns the way I think it's going to turn, it will move back up in sort of a direction like this. Oh, there we go. Okay, there we go. Super. Yeah. So if we're gonna move up in this general direction, so that kind of gives you an idea of sort of where we are in terms of. There we go. It's kind of going to move up in that direction. As you can see, it's just kind of down, up, down, and then up. And I think we're going to go up. At least this is what this is saying, because we're beyond earnings. We had earnings here, so we're beyond earnings. So I think that we potentially could go on this bump up, depending on how this runs. Now the question is, let's not buy today. Let's buy it tomorrow. Let's see if this 10-day exponential moves higher. If it does, then we could probably ride it up here, probably for about $60 or $70 gain on that. So looking pretty good on that, and that might be a great place to be in Netflix. Netflix is looking good. It's got an 87 relative strength. I typically like to see at least 80 on the relative strength. So that might be a very good swing trade. That might be a very, very good string. Okay, Mr. Smith bought some Ford today. Well, you know what? I have Ford on the watch list. I just wanted to pop over there and to show you that I think that might be a very good trade, Mr. Sid. This is the one that I'm working on as well. Let's take a look at the watch list. By the way, this is available. If you go to my website, I do run this watch list, and Ford, I did update this last night. The buy point on this is 738, and currently it's trading at 794. So it's a little bit extended, but this is this is starting to be a very good chart, by the way. And Ford, I think you're going to be rewarded if you go into Ford. And the reason I do is because they do have first of all, they lead in terms of vehicle sales in the United States with the F-150. The Bronco apparently is doing great guns, and they have an electric vehicle business. So, of the existing companies, I think it is the one. Definitely look at this strong, and we're right on the 21-day. I think, Mr. Sid, you may have caught it right at the moment that it really went well, because look at this. We had very nice earnings. We're up 58%. They're finally starting to make money here, and that is a good thing, not a bad thing. Oops, wait a minute. Go to webinar. That is a good thing, not a bad thing at all. So goodness great. Let's see if we can. It looks like we have lost the feed for TikTok. So let's get back on TikTok. There we go. Sometimes I have to turn off the alerts on this system. Anyways, it looks very, very good on Ford. I think you made an excellent move here. Now, typically, I don't recommend stocks that have a 4 out of 9. That just is below my. That's below where I want to be. I typically like to see at least 6 out of 9. But this is getting some love from the fund, so I like that. This is still very early in Ford's kind of evolution. As you can see, we still have a downward trending chart on a monthly basis, so I don't like that. But it does look like we're finally starting to see some strength here. We have a relative strength of 75, which is not quite what I would want it to be. I'd like to see 80, but it is improving. As you can see by this line, it's moving up. So I have some pretty good faith in Ford. I think you may have made a good buy. Here's the thing about Ford. You might see a little bit of backtracking on this, and it's pulling back a little bit prior to earnings. I want to kind of see what this is going to be on Friday. I may initiate a small half position on this. So it's interesting. They have a new CFO coming in, John Lawler. And he is definitely, he's replacing the current CFO. So I think that, it seems like things are starting to align for Ford. So really, really good, really, really good on that. Let's see TikTok here. See if I've got another. Did you see what Netflix just did? I didn't see what Netflix just did, but let's go back to Netflix. NFLX. Let's take a look at the chart for Netflix, and let's look at the daily. Let's look at the daily chart. Let's look at the hourly chart. Wow, Kazawa, you are super right about this. On Netflix. So there was a big sell. Okay, this is an unwind, by the way. This is people that are getting out of their positions. This is essentially people. This is called a blow off here, and what has happened is that you have people that are trying to cover their shorts. They're trying to cover their short positions, but as you can see, it popped up here, and then it's pulled back, and this pullback pretends probably what it's going to do. It's probably going to open lower tomorrow, but let's look at the daily to see kind of where it's trading. Yeah, it pulled back up to the line here, and this looks like a short cover. to me. It does look like it's possibly changing direction. Let's look at the 30-minute chart. Yeah, that's where we had. I want to see the 1-minute chart to see kind of how it. Yeah, okay. So we definitely had a lot of buying here. This is a short squeeze, and then when we settle down to the regular, to the regular action on that. So that is Netflix. Probably looks like a direct change on Netflix after their earnings. They did have some good earnings, so very interesting. Okay, so let's look at the SG stock. Oh, at 5G stocks. Excuse me. Well, okay. Well, there's a number of 5G plays, but I wonder if there is a 5G. If that's no, I don't. That doesn't come up. Right now, I think the best 5G stock out there is probably Qualcomm or Qorvo. But let's look at QCOM. And I hope I'm right about this because I definitely have it in my portfolio, so I hope I'm right on this one. This is Qualcomm. Let's look at the daily on this. Yeah, we had a nice movement up today on Qualcomm. This is a 5G stock. It's got good relative strength at 92. There was some selling. It's a fairly low volume, but we're starting to see some movement up to the 10-day line at 127.66. It's up $6 today, quite good, and I think that it's reacting very, very well. Now earnings are in 6 days, so I probably will be out of the stock in 5 days. But currently, we have a pretty good checklist. We have 6 out of 9. That's my minimum typically, and we have good increasing fund ownership, so that's looking good too. That's probably one of my favorite of the 5G stocks right now. But there is another one that I want to show you, and I'm not in it right now, but I've been in it before, and that's Qorvo, QRVO, and they make the RF, and it's up today as well. So let's look at. They almost report at the same time. So this one is also one that's up $5.53. It's pulled back up to the 50-day moving average. I still don't like the way this is trending, but it's not bad. It's in a trading range. In a consolidated trading range. So let's look at Qorvo. It's got a good checklist. It's got an 8 out of 7 out of 9, a little bit better than Qualcomm's 86 on the relative strength. So those are the two. Now, Marvell Technologies did buy another company. So MRVL, that's the other one you want to look at on the 5G thing. It's pulled back a lot today. So this a lot of times happens when stocks are acquiring another stock. So basically, it was a sell-off. As you can see today, it's down a little bit over $1.04. There's a little bit of overreaction there, but Marvell has been pulling back, and it still has a 7 out of 9, which is good. Its earnings are coming up. They had good earnings last quarter as well. So those are really the 5G stocks that that I'm looking at kind of for that. Hi, yesterday I meant FUBO, not I apologize. I apologize for that, Katrina. I meant FUBO. So let's look at FUBO. Let's see if we can. Thanks for watching me for 2 days in a row. I appreciate that. FUBO. All right, here we go. Fubo. Fubo Television performs live streaming. This is pretty cool. Gotta admit, this is kind of very cool, actually. This is basically an IPO. Let's look at the weekly chart. First, the best way to when you're accessing charts, the best way is to start with that weekly to see if there's any viable patterns, and then move to the daily so you can see the entry points. Currently, this has a relative strength of 94, looking very strong. A lot of people seem to like this one. I don't know a lot about Fubo TV, but it's got excellent market capitalization, almost $1 billion, $896.5 million. So wow, that's pretty good. 4 out of 9. It's a little bit weak on the buying list. On the fund ownership, okay, it's in there. Okay, here's what I would do with Fubo. I'm going to put FUBO. Here's what I would do. I wouldn't buy this right now, but I would definitely watch list this one. This one is not a buy right now, but it is a watch list, and it may very well move higher. So, definitely want to keep that. It's got a 94 relative strength, so I really like that. And it's the kind of stock that could do really, really well. Streaming, as you know, is huge and just getting bigger all the time. So very good. Let's take a look at this gem I own. PayPal, 35 shares at 205.35, and there is a 5% total loss. Should I sell into earnings with a likely loss or buy more and reduce? Okay, thank you very much, Gardner family. I do appreciate that. That is here's the strategy that I would do. And you probably don't like hearing this, but here's what I would do. On PayPal, I would take the loss now and into earnings. I don't want you to hold this through earnings because it may move lower, but after earnings, it may move up again. So, how can you get both? How can you get both ends of the stick? How can you make it all work for you? Well, you can make it work for you if you do this. Now, I definitely believe in the issue, okay? And here's why I believe in the issue. It's not just me. The William O'Neill checklist is 100% on this. So this is definitely the right stock. Let's look at the ownership. The ownership is increasing. That is also very, very good. But I don't want to hold this thing through earnings because earnings might... Now, it's possible that earnings will be great and it'll move up on it. But don't take a chance of it reversing on you. What I would do is sell it probably the day before earnings and then see if it pulls back. If it pulls back, then you might want to buy it again. I know it sounds kind of weird. Why would you want to sell something and then turn around and buy it? Well, I'll tell you why. Because the key level here is on this 50-day moving average. Okay, currently it pulled back below the 50-day, and now it's pulling up. So in the next 2 or 3 days, it's likely to move higher. It's likely to move higher. PayPal is likely to move higher in the next 2 days. Now, earnings are in 4 days. So when you get to about 3 days, you want to see if it's up. If it's up, then I think you want to sell it because it probably will pull back to this 50-day moving average when it comes to earnings. That's just how it works. But it may provide a buying opportunity on the other side. This is the monthly chart for it, as you can see. So let's kind of look to see it moved up very, very nicely up until and up to the last 2 months. It's been pulling back for the last 2 months. If the earnings are very good on this, it may pull back once again and before it moves higher. So here's what I would do on that stock. I would sell it into the earnings and then watch to see how it comes through. It comes through. So that's how I would do it. Tupperware, next buy point. Well, I did buy Tupperware, as you all know. It was strange because, I wasn't looking for it, but I did my scans. I scan typically 8,000 to 9,000 shares, different stocks for certain characteristics that are pretend it moving higher. Now, can I always tell? No, but it helps when that happens. Let's look at Tupperware. Let's look at the chart again. I showed you a chart in the run-up on the slides. Here's another one that I have right now. So let's look at the buying criteria. That's always important. It has a 7 out of 9 checklist. That 6 out of 9 on the O'Neill checklist is my minimum, so it meets my minimum. Let's go to the fund ownership. It has increasing fund ownership, though many of the tech issues have a lot more than this one, but it's increasing for some reason. Let's look at the sector. The sector is excellent. There's 197 sectors. This is ranked number 9. This is the household appliances wares group, which is not really been a lot on my radar. But with the stay-at-home economy, people seem to love Tupperware. Tupperware, seems to have a real following, I guess. People are baking and putting, saving food and all that kind of stuff. So who would have thought that Tupperware would do any interesting thing? So let's look kind of at the stocks in this industry. Well, we've got, let's see, iRobot, which is the Roomba. We've got Better Without New Mexico. We've got Whirlpool, and Whirlpool has done very, very good. Look, all these are up. Interestingly enough, Hamilton Beach. I have a juicer from Hamilton Beach. I need to use it a lot more and slim down. But anyways, I have a Hamilton Beach juicer. in my house. So it looks like this is a pretty good area. Now, it's true. It's true. Tupperware is sort of the best of the breed here, and it's got a lot more volume than anybody else. But this seems to be an area that people are really liking. So where's the next buy point on it? Well, let's see. I don't know. I think, the way this looks right now, the buy point would be basically at this this level here. Oops, there we go. Would be at this level here, and it's gapped up above that. So unfortunately, right now we don't have a buy point until we get a pattern. What's probably going to happen is we're going to get a consolidation in the next few days. What I'm doing is I'm pushing up my stop loss. So unfortunately, I don't really have a good buy point for you right now, on Tupperware. But if it does move up tomorrow, then you possibly want to, maybe consider buying it on a pullback. And I will try to get out there to everybody if we get a pullback on this one. Unfortunately, sometimes these gaps happen so quickly that I don't I don't get my action trade alerts out. I should have gotten an action trade alert out on this one, because like the several other action trade alerts that I had, this one moved pretty fast. So I appreciate your question. Right now the buy point is about 27.19 on there, and it's on the small it's on the watch list as well that I'm maintaining on that. So very good. All right. So what do you think about Zynga? ZNGA. Let's look at Zynga. ZNGA is that symbol for Zynga, and it's a developer of social games. So let's take a look at Zynga. There we go. It's got a consolidated. It's moving between about 810 and about 1069. It's pulled back a little bit. It's okay. Its earnings are in 6 days. I probably wouldn't buy this one. We have a relative strength of 87, but we have this movement down, and we have low volume. So I do think this is going to probably, move lower into the earnings. I would wait at least until this one goes through earnings. I would wait till this thing goes through earnings. Earnings for Zynga are on November 4th. So just in 5 days. I am not, it's okay. I think this is a watch list and not a buy. Let's look at the checklist. 6 out of 9. That is a minimum for me, so that definitely makes it the watch list. Let's look at the fund ownerships. We definitely have increasing fund ownership. And let's look at the industry group. 58 out of 197. So that's pretty good. That's pretty good. It's down a little bit today. Computer software gaming is the group that it's in. So would I buy this thing now? No, I would not buy this right now. I would watch this fund though. I may put this on my watch list, but I would not buy this at the current time. Wait until earnings and see what happens. All right, so thank you very much for everybody looking on TikTok. Hopefully I could get, what's the sticker? The sticker. Oh, it's J.K. Malone, I think. 9 online. Okay, that's pretty cool. Don't know what that sticker is. That's my ugly mug, I think. Let's see if I can get another one here. This market is going to crash tomorrow. Well, maybe not. You never know. I don't think it is going to crash tomorrow. I don't know if the world is going to end. Not sure about that. Don't think so. But you never know. So, there is a way we can kind of look to see kind of what the market direction is. And I'm just going to go over there to see if I can, look at the market trend. If I can look at the market trend here. Let's look at today. Okay, so this is the overall market, and I'm just going to put this up on the screen so that everybody can see it. And that's basically it. It's pulled below the 50-day moving average, but it is pulling back up to this line. So I do believe that, at least from what I'm seeing now, we are in what they call a W-shaped recovery. And that was this leg down. Let me show you that leg. Oops. Let's see if I can get that to work. Well, maybe not. This leg down, and then we're moving up from there. So let me put the chart up here in a bigger way and see if I can show you that. Yeah, there we go. All right. So we are seeing Yeah, this is the overall market, and it is up significantly, 2% on the NASDAQ. So this is the NASDAQ. We have a W-shaped recovery, basically at the end of, we've got, this was the COVID here. This is the up from the COVID. Then at the end of August, the fourth week of August, we started to move down. We moved down. We bounced. Basically about the third week of September. We moved up till about the second week of October, and we're moving back down. So it does appear that we have turned the corner, and this does look like a bounce higher, and looks like we may be moving up to potentially as high as 12,000 on the NASDAQ. So I don't necessarily think that the market is going to crash tomorrow. That's not what the chart is saying, but you never know. You never know. I mean, nobody can foretell the future. So puts on the SPY tomorrow. I don't know. I don't think I would be doing puts on the SPY. And I'll tell you why. The reason I wouldn't be putting on the SPY, is because we have had, it looks as if we may be in the very beginnings of a market direction change. And I try to be very, very careful about this, but it looks as if, and I want to show you this chart right now. This is the live chart for, this is the live chart for the spider. I do think it's moving higher. I think it's moving higher. And here's why I say that I don't think that doing puts on the spider right now would be necessarily the thing to do. And the reason I don't think it is because we've had a change in the direction, and on high volume. If this thing hadn't reached this red line here, then I would say you're probably right. You're probably going to win with that. But this looks like a reversal to me, and I don't think it's going to work for you. But that's just my opinion. That's just my opinion on it. So I wouldn't be doing puts on the spider today. I wouldn't be doing it just because of the way the chart is looking. Thoughts on JD.com? I really like JD.com. This is one of the biggest online retailers in the world, of course. Everybody knows. Of course, everybody's heard of Alibaba, but this is sort of the other one in China that just is massive, and it's had some really good results, actually. It's up today. It just bounced right off that 21-day exponential. It looks like it has a blue dot. That is very bullish. 96 relative strength. This is definitely in the buying. Yeah, 100% on the checklist. Let's look at the funds. We have increasing fund ownership, and we have excellent industry rank at 15 out of 197. So I would say, you know what? This is buyable right now. The buy point on this one, with a cup with handle, by the way, this is the best chart pattern that you can buy on, is 85.39. So I'm going to put this out there on JD.com. So JD, which is the symbol for it, the buy point on it is equal to 85.39. And I'm just going to put that out there on the chat. By the way, everybody that's watching on TikTok, I'm putting out buy points on the chat on YouTube. So just, if you want to see these, you could just jump over to YouTube. Super easy to do. All you have to do is go to youtube.com/Dallas Trading Floor, and this is episode number 163. So that you can see those. And by the way, after the show ends at 3:30, it's typically up on YouTube within about 30 minutes or so. And if you want to subscribe to it, super easy. Just go to, and you want to see it, just go to my profile, hit that link. It takes you directly to www.Dallas Trading Floor, and then there's a tab that allows you to see all of the old YouTube and the current one YouTube episodes. So that's the easy way to see it on YouTube. And if you do that, by the way, if you are on YouTube, I would really appreciate it, really appreciate it if you liked it. You hit that like button. Don't hit me, but hit the like button. Hit the like button there. Thank you very, very much. All right, so next question from from here. So JD, so thank you. Oh, another great stock, by the way, Andrew. This is very good, by the way. CHGG, this has been doing great. This has been a breakout, by the way. This stock is pretty good. Let's just take a look at it. It's pulled back a little bit, but it's been doing it. And there's been some selling. So here I am saying I was looking at it about 5 days ago. So you never know. But basically, here it is. There is a buy point on it at 89.82. It's decelerating away from that, but it's forming a cup pattern. So let's see if it reverses on the 50-day line. There was some selling in here. Also, earnings are due, and basically earnings were down, unfortunately. So it has pulled a little bit lower. Let's see if this gets a little bit of strength. It's very strong, 95, but we want to make sure that it's moving up before we buy it. So it's got a 7 out of 9 checklist. The ownership on funds is quite good. We have increasing fund ownership, which is good. The industry is good. It's 90 out of 197. So that's all in place for something good. What we're missing on this one is we're missing on a reversal going higher. You don't want to buy a stock when it's going lower. The old adage, you try not to buy a falling knife. Well, that's why you don't want to do it. You want to buy a stock as it's moving higher. This one, unfortunately, probably will turn, but it is not. So you want to watch this one. Don't buy this right now. Unfortunately, it is just not in the right. It's just not in the right where to do that. So it will be hopefully soon. Okay, so puts on SPY tomorrow. No, OSTK, and this comes from TikTok. OSTK. Take a look at that really quick. Oh, wait a minute. There we go. OSTK. Yeah, Overstock. Yeah, bit of a sell-off today on Overstock. It pulls back from, it was at the, now here's the thing about Overstock. I'm looking at this chart. This is not a buyable chart, unfortunately. It's off about $9 today. It just had earnings. This is why, folks, it is so important that going into earnings, it's always kind of a good idea to sell it the day before earnings, especially if it's moving up in value. I know this is counterintuitive. Most people will say, well, gosh, it's going up. Why don't I just hold it? Well, that's not necessarily the way to do it. And the reason is because it's just an old adage: buy on rumor, sell on news. And that's definitely been the case with Overstock. Overstock has been crushing it. It's been doing great, but it's pulled back when it hit earnings. It still has a relative strength of 99, which is stellar, by the way. It's outperforming all but 1% of the market. Here's the weekly chart. Let's look at the weekly on it. It's pulled back off of this line. This is the 50-day moving average, and it is down. Even though it has a relative strength of that, this blue line here, this is the relative strength line, it is pulling down, and the selling is pulling up. So even though the earnings went up 156% this quarter, unfortunately, this is not, you don't want to buy it in this position. You want to watch this one and wait for it to turn. If this thing turns higher from where it is now, if it turns higher, then I think it is potentially a buy, because it's set up very nicely. Let's look at the monthly chart. It's kind of making it. It seems as if it's sort of it's in a downward trend right now on the monthly chart. So I don't typically like to buy it when I'm seeing a downward trend on the monthly chart. So even though it has a relative strength of 99, I think that you want to watch this one. Don't necessarily, probably not the time to buy it right at this moment. Probably not at this moment. Party, please. It's under $10. Can we add some for long? PRTY. Let's look at PRTY. PRTY. I think this is Party City, which is kind of cool, especially coming into Halloween. They're the ones that do the that do the party stuff at the mall and stuff. In the not renting retail space, but these guys do it. It's pulling back right now. Let's look at the weekly chart. I was looking at the monthly. Yeah, the weekly chart I just don't think this is a good ad. I know it's earnings in 11 days, but I'm seeing a lot of selling here. It does have a good relative strength, though, 89. That's excellent. Typically, anything above 90, anything above 80 is good. But at $2.06, I just can't get excited about this one. Unfortunately, it's 4 out of 9. That doesn't meet my checklist. Let's go back to the fund ownership. Well, it's got decreasing fund ownership. You know what? I'm sorry about this, but I'm sorry to be a party pooper, but I can't recommend this one. Not even for long term. Not even for long term, because unfortunately, when things start going the wrong direction, a lot of times they don't stop. So I know it's a cheap stock, but not the one. I don't think you want this one. So I'm sorry to be a party pooper, but no Party City for me. Anyways, that's party. That's party. What do you think about ZM? Zoom. I love ZM, and you know what? My brother got into ZM. He made a ton of money, and I didn't, and I'm kind of pissed. Oh well, that's how it works. It's pulled back a little bit. Let's look at the weekly chart first. Well, let's look at the monthly chart. We'll start with we'll kind of come in here. The monthly chart is just absolutely phenomenal. It's been basically around for 2 years, 2009, 2020. It has just taken off like a rocket, but that doesn't tell the whole story. Let's look at the weekly chart. The weekly chart, it's moving right up this 21-day exponential. It's pulled back from a little bit, but that is looking like it's pretty strong. Look at that. Earnings per share is up basically 1,000%. It doesn't get much better than that, folks. But it looks like it's pulling right to this 21-day line. That seems to be where we're seeing it be most, to see it work most. This is sort of the direction that it is going, and definitely it's going there. Now, here's what I would do. I would wait until there's a reversal on this. Right now, it's moving down. But if this thing reverses and goes higher, that's a time that you might want to be interested in buying it, because it's got an 8 out of 9 checklist, which is excellent. It has increasing fund ownership like you read about, which is great. It also has an industry rank of 8 out of 197. So everything is looking pretty good. It's an expensive stock, but it may be justified if it reverses. Now, here's what I'm talking about, the reversal. If you look here, you'll see this red candle here. That's a pullback, and then boom, it just moved right back up to the 40-day and then right to the 21-day, and it just marched right up this ever since. There's been some pullbacks, but it's basically to this 21-day exponential moving average. Let's look at the daily chart to see how it's trading. Yeah, it's pulled below the 21-day moving average. Okay, this possibly could signal a change in direction. It's too early to tell if this is a change in direction. And the reason it's too early to tell is because when you look at the volume here, it's lower than the average. So there's not a lot of conviction necessarily in this red candle. So what do you do with this? Well, you don't buy it right now because you want to see a clean reversal up to the 21-day moving average before you buy it. So remember, you always buy as the stock is moving higher, not when it's falling. So with Zoom right now, I think that it's watch list. Don't buy it right at the moment. Wait for the reversal. If there's a reversal on it, this might be very, very good because it's a strong stock. It's just at this moment, I don't think it's tactically necessarily the best place to buy it. Thoughts on NEO? I went over that a little bit before, so I kind of covered that. Let's see. Do we see a double bottom on Spotify? Thank you. Boy, you're starting to pick up the lingo, Marcin. That's great. Hopefully, you have looked at the O'Neill book, because it's a revelation once you start applying this. It becomes kind of easy to see patterns. So let's look at it. I don't think this is a double bottom. I don't think this is a double bottom chart pattern. You're going to see that in the weekly chart typically. So let's look at that weekly chart. No, it's a consolidation. It's what they call a consolidation. And it does have a pivot on it at 299.67. We're currently pulled back a little bit from that, but I do think that is sort of the range that we're talking about. We're talking about a low basically of 299.67, and then we're talking about a high. We're talking about a low about on the consolidation of about 225, and then a high of 299. So basically, this is in a consolidation base and not in it's not a double bottom. It's not a bottom. It's a consolidation base on this one. So that's good. I mean, I'm glad that the fact that you even know what a double bottom is terrific, I think. Basically, if you want to find out what I'm talking about, I mean, it's completely Greek. I know a lot of people here, double bottom, cup with handle, it's all over the place. And I'm just saying all these things. Where am I getting all this stuff? Well, actually, there is a method with the madness. If you do go over to the website, www.Dallas Trading Floor, there is the Learn to Trade bookshelf. And there is this book. And you think you should definitely read this book because this book changed my life. How to Make Money in Stocks, A Winning System, Good Times or Bad by William O'Neill. And he is sort of the father of technical analysis. And in the last about 20 to 30 years, most of the top traders in the world have been technically inclined and technical analysts. So if you want to get into trading and you want a really good method that could actually make you some money, and it's not a buy and hold or a buy and pray or buy a mutual fund that goes down or buy dividend stocks that don't pay like ExxonMobil, read this book, How to Make Money in Stocks, A Winning System, Good Times or Bad, and also buy this other one, How to Make Money in Stocks, Getting Started by Matthew Galgani. Why is this such a good book? Because this is a checklist here. This is the theory. This is the checklist. Definitely buy them both together. And of course, they're available on the website at Dallas Trading Floor. So that's sort of the end all there. But the fact that you're actually doing that is terrific. Why is Twitter going down? Goodness gracious. Well, Twitter, unfortunately, is sort of in political crosshairs because it's sort of becoming difficult for them to basically be as independent as they once were. Now, why is it going down? Well, it's actually not going down. It's actually a good stock. Let's look at it right now. This is Twitter, and we have a increasing here. Now, the earnings are due on today. So this is another example of, in the after hours. So let's see if we can find what's happening in the after hours for Twitter, TWTR is the symbol for Twitter. I think we're after hours now. Yeah, okay. Well, no, we're up. So, gosh, I don't know. Interesting. Yeah, I mean, at least from what I have now, I haven't checked the after hours, but it seems like they did have a good. Well, no, they're down. Okay, I apologize. Yeah, no, their number is off there a little bit. We were down. I don't know. It looks like it's pulling higher. It's $1.99. Now that was before the bell. So, what is after the bell? I'm not so sure. Let's look at the checklist. 6 out of 9. That's my minimum. So that's good. The ownership of funds is good. 114.60. I like that. Also, basically 42% of this stock is owned by funds. That's also very bullish. And the industry is good, 23 out of 197. So why is it pulling back? Well, I don't think it is. I think it may be pulling higher. Would I buy this right now? Well, I'm going to wait to see how it opens tomorrow. Never buy when it's going into earnings. Wait to see what happens. Typically, even the very best stocks will typically go down after earnings, and then, if it's good, then they'll firm up. So it's interesting. All right. So Amazon, Apple, Facebook, and Twitter. Should we keep them after earnings? Here's the thing. I typically like to sell into earnings. All these are great stocks. But it's the old thing of sell on rumor, buy on rumor, sell on news. Why can't I get that right? Amazon, terrific stock, but it's been pulling lower. Let's take a look at that chart. And the earnings are due today. So we'll see. There's just a whole lot of earnings going on right now. Should you keep it? Well, I do think it does have an excellent chart pattern on the weekly chart. Let's look at the daily to see if there's it's pulled right up to the line. It's got a cup with handle. If this thing reports well and you have it, you might want to keep it. Or actually, if you don't have Amazon, you might want to consider buying it. Actually, We have a nice relative strength line, 91. I mean, everything looks good for Amazon to me. 8 out of the 9. Ownership is strong. Industry is great. 15 out of 197. So, tactically, what are we going to do here? Cup with handle. I would hold this thing. If you're going to go long, and this thing doesn't fall out of the sky, the main reason that you sell before earnings and then you buy afterwards is because that way, all of the day traders are basically shaken out, and you basically are not giving up any of that profit. Profit's hard to make, so we don't want to give up as much of it. We want to give up the minimum that we can. Capital preservation is important. So even though it may go up afterwards, it's always a good idea to preserve that by selling into earnings, waiting to see what happens, and then buying it on the flip side. Now, if you do that, of course, you can give up some of your profit, but it's worth it for the protection. It's worth it for the protection because a lot of times even the best stocks will go down. So very, very interesting. Thank you so much for that question. All right, I have FOMO with NEO. I was buying it at 250 last year. Interesting. Okay. Google and Netflix went up. Okay, that's very bullish. That's very bullish. Well, let's look at this one. This is kind of an inexpensive stock here. It's FOMO. So let's look at FOMO. The reason why cheaper stocks are harder to trade is because they typically, anytime there's a movement, it's amplified under $10. So it's harder to maintain your capital base on a stock that's under $10. I know this sounds very strange, but when you think of it logically, it's definitely true. Here's why. This is why on my small portfolio, I have a graph here, this graph is an important graph because it kind of shows you how I look at things. I don't necessarily look at the cost of the stock. That's not the only thing I can look at. I look at the position size. Now, in my portfolio is like a pizza, and there are 8 basic full positions in the pizza. And so what I do is when I acquire stock, I acquire, 1 piece of pizza, then 2 pieces of pizza. And so even if it's an expensive stock, I don't acquire as many, but I have more latitude in terms of the cost. If it's an expensive stock, I set the stop loss typically at 93%, which is a 7% loss, and that's the most I'm willing to take. On a more expensive stock, that gives me a wider range. The cheaper the stock, actually, the more risky it is for losing your capital. So that's kind of one of the things I want to show you. And that's available on the small portfolio. And the link is available at www.Dallas Trading Floor. So let's take another question from NEO and Ford. You know what, Mr. Sid? This is a very good question. I'm actually, this is kind of an exception for me. I typically don't like stocks that are under $10, but I have to make an exception, and that is Ford. I do think that Ford is making some really good moves right now. It is true, it is not Tesla, but I am liking this sort of action, and I probably will be a buyer of Ford when we get a relative strength of 80. Right now we're at 75, and this is a watch list for me, but I am very, very excited about Ford because it's getting to the point where it's buyable. Right now it's only 4 out of 9 on the O'Neill checklist. I like to see 6 out of 9 or better. But there is increasing fund ownership, which is good. They're not leaving, they're coming. So I like that. And the industry is excellent. Right now the automotive sector is one of the best places in the market. I know that's hard to believe, but it's number 2 out of 197. So I like to be in these very top ranking sectors. Now, what is the number 1 stock in that? It's Tesla. That's why I own Tesla. But Ford is definitely buyable, but not yet. Wait a little bit, just a little bit, and I think Ford is going to be the buy of the century. But let's see it get to relative strength of 80, and then I'm probably going to do, if this happens, and I think it very well may, I will issue a trade alert. And not that you have to follow my trade alerts, because a lot of times they're wrong, but a lot of times they aren't wrong. A lot of times they're good. Sometimes, because I'm looking at it on a totally technical basis. If it gets above an 80 on the relative strength, I think it might be. It could take off. It could double or triple very, very easily. And the beauty of it is they're selling into a market that actually has demand, and I like that. I like companies that can sell a product that actually can get paid for it if they make the right product, and that is definitely the case with Ford. I don't know if you know this, but the 150, the Ford 150 is still the number one truck after like 50 years. And the Bronco is doing great too, and they're getting into electric vehicles, and they're making a move on electric delivery vehicles, which I think is just a great place to be. I think they're going to do great, but I want to see a little bit more strength on them. So that's my take on Ford, which is symbol F. Regeneron, REGN. Let's look at Regeneron, REGN. Of course, these are the guys that have the COVID. The COVID vaccine in trial, and it looks like it's doing good. Apparently, it's pulled back a little bit. I don't like this chart all that much. Let's look at the weekly chart to see if there's any love there. It's okay. It's in a consolidated range. It's in a consolidation, but the trend is down, and I don't like to see that. At this moment, I probably would not be a buyer. Because if you're looking at the slope on the trend, that is the slope on the trend. It's pulling back to the 50-day moving line, so it's got 89 relative strength, which is good. This has got a good checklist. It's got a good fund ownership, but you know what? This is not the time to buy it because it is, unless it changes its direction a little bit, I won't buy it. I won't buy a stock that is trending downwards. That's basically the thing. But is it going to trend upwards? It very well could move very quickly to the upside. So thank you very, very much for this comment, Ryan. I love it. Thank you, man. Tell all your friends about my channel. If you do, that would be great. And hopefully you go out there and if you do, tell your friends about it. Like it. Hit that like button. There we go. Got that going on. And, everybody out there, it's great always. I'm going to be back tomorrow at the same time, 2:30. And appreciate everybody on TikTok and, in all the other platforms. Hopefully, I'm going to soon have something. I'm working on a Roku channel, and hopefully they'll have more than just me up there, which would be nice. So we'll see where it goes. We'll see where it goes. Okay, one last question. Any chance that you can give a ticker, could give a dive into ticker symbol UAVS? Let's look at UAVS. Thank you so much for that great comment. UAVS. Let's see if we have anything. AK. Oh, I know this one. Yeah, this is a penny stock. This actually is a very strong one. Aerial Systems for Agriculture. Argyle Aerial Systems. And this is I know about this one. This has been on a number of my watch lists. It's off a little bit today. Now this is a little bit difficult stock to buy because it is so inexpensive. But let's see if we have an ability. Well, it's got a 4 out of 9 on the checklist, which actually isn't bad for considering how cheap it is. It actually does have some fund ownership. This is amazing, and it's definitely moved up. So this is much more speculative, and I wouldn't recommend putting anything more than about a half position in this one. The question is it buyable, and where is it buyable? Well, let's see if we have an idea. I don't like the trend on this, unfortunately. I like this company. This is a watch list, but this is the trend on it. Unfortunately, right now, as you can see, I just drew that red line, and unfortunately, it's down. But it looks like we have a turn here. This could be critical. I want to see this thing move above the 50-day moving average. This is buyable potentially, but it has to exceed $3.92 a share. If this one UAVS exceeds $3.92 a share, and the direction is upward, then it is a buy. So, but right now, you want to do this. You want to set an alert. You want to put this on, Yahoo and all Yahoo Finance and some of the other ones have a watch list. Put this in your watch list and set an alert for $3.92. If this thing achieves $3.92, then it's probably a buy. So, thank you very, very much for that question. Really appreciate it. Well, I have wasted another hour of your time. And I hope that everybody out there will consider learning the CAN-SLIM method. That's the method I use for evaluating stocks. It's technical, and it does have some fundamentals in it, but it's mostly technical. And the way, of course, to do that is the easy way to do it, of course, and the way is to go over to my website, which is www.dallastradingfloor, and then go to the Learn to Trade bookshelf, and it's this orange book here. And if you buy this one and this one at the same time, you'll learn a lot about entry points and that kind of thing. And it's a lot of fun. And that book changed my life, and I read it about 20 years ago in the first edition. It's like it's in the fourth edition now. And it will change your life and hopefully make you some money. So until then, until tomorrow at 2:30, happy trading.